We begin tonight with the latest on the coronavirus outbreak. Countries have begun to take action to try and contain the economic fallout. Today, the U.S. Federal Reserve made its biggest interest rate cut since the 2008 financial crisis. Australia and Malaysia also slashed their rates. And following an emergency conference call, G7 finance ministers said they are prepared to use, quote, all appropriate policy tools to respond. All of that, though, failed to calm U.S. markets. The Dow lost nearly 800 points, or 3% of its value. The S&P 500 fell by more than 2%. Toronto markets, meanwhile, are holding their breath ahead of tomorrow's Bank of Canada decision. And here's a look at where the spread of COVID-19 stands as we speak. The number of cases worldwide has climbed, now approaching 92,000. More than 3,000 people in total have died. The virus has spread to 74 countries. Here at home, there are 2 new cases in Ontario and 1 in BC, bringing Canada's total number of cases to 30. So, what measures are the feds considering to protect Canada's economy from the potential impact of this global outbreak? Bill Morneau is the Minister of Finance. Hi, Minister Morneau. Thanks very much for joining us.
Vashi, it's really good to be on your show today.
Following your call with other G7 ministers, you all issued a joint statement saying, quote, we reaffirm our commitment to use all appropriate policy tools to safeguard against downside risk. What policy tools specifically will your government be using as it applies to the potential impact of coronavirus on the economy in this country?
I think maybe I can start, Vashi, by saying that was an important call for us to have this morning with G7 Finance Minister. I've also been on the call with them over the course of the last week and a half, really, subsequent to our G20 meeting. We're committed to working together. We're committed to thinking about all the measures that we can be taking in our respective economies, but also thinking about how we can work together on those. Of course, what you'll notice in that communique is we said as appropriate. So the measures are going to be different in different countries because they're at a different situation. So if you think about Italy and Japan, for example, countries in the G7 that are facing bigger issues around the coronavirus right now, they are by necessity in front of the rest of us. So we're going to be thinking about the broad range of things that we can do, and we will be following the actual facts on the ground to decide when and if we should do those.
Okay, but then zeroing in on the Canadian context, we've seen, for example, from the Parliamentary Budget Officer, the anticipated economic impact could be, and I say could be because it's so fluid, it's so volatile, around 0.3% of GDP. If in fact that does turn out to be the case, what levers are you prepared to use as Finance Minister?
Well, let me just start by saying I think it's premature for me to be saying what the economic impacts are going to be. Clearly, the duration of this issue and the severity is going to be important in us determining what might be the right course of action. And as you think about the potential challenges, we're obviously thinking first and foremost about Canadians, about people who might be impacted at work as a result of challenges in their sectors. You can appreciate what they would be. The oil and gas sector, the tourism sector are places that can be impacted by issues like this. And so we'll be thinking about those sorts of challenges and supports. And then you'll have businesses that may find themselves with challenges. So you saw in Italy that they took actions to support businesses that had a significant drop in revenue. Those are the sorts of things that come from learning from other international colleagues, and they're things that we can be thinking about because we want to be prepared for any eventuality.
Those things that you just mentioned, are those things Canadians can expect to see in the budget?
Let me step back and say that, the budget is not the necessary place for us to deal with this. The starting point is that we have a strong economic situation. We're in a good position. Our economy is resilient. We have, high levels of employment. So that is a very positive starting point. Should there be some issue in the economy that we see that happens, quickly or even farther out, we will deal with that as the facts emerge. It could be in advance of a budget, it could be in a budget, it could be after a budget, and it very much depends on the situation. So we're not going to jump to conclusions without facts and information, but we certainly are going to be prepared to respond appropriately.
So I have to challenge you for a second on sort of your optimism where the economy is concerned. We saw just, I think, out on Friday that GDP slowed in the fourth quarter to 0.1%. I take your point on employment. I take your point on wages. But growth in this country has considerably slowed. Are you being too optimistic?
Well, Vashi, those are your words, not mine. What I can point to is exactly what you said. We have strong levels of employment. Wages are going up, so people are actively employed at work. There are certainly headwinds. There are headwinds around global trade that we've seen. There are now more immediate challenges that have been presented in our own country with the blockades that have an impact on people and on businesses, and now more clearly this issue on the global economy. So I'm not being optimistic, but I'm pointing out where our starting point is. Our starting point is one that is stronger than many other economies.
Even with growth numbers like that, with respect, are you not concerned about how slow growth in this country's economy is at the moment?
Well, what I was saying, Vashi, is in a comparative basis, if you think about where we're starting versus, for example, the Italian economy that's going through particular challenges, that is not in any way to say that we shouldn't be prepared for this challenge with everything that we can think we might need to do, and that is exactly what we're doing. It's the right thing to be doing. Coordinating with other countries is important. I'm also planning on speaking to the finance ministers across the country, from the provinces and the territories tomorrow, to keep them up to date on our thinking, to make sure that we have the opportunity to coordinate to the extent necessary if circumstances warrant, and to make sure that we can protect Canadians, protect businesses in the face of challenges.
You said that your decisions will be made based on the facts, and I imagine by that you mean the actual impact of coronavirus or what may it be on the economy. Is there a point at which, is there a signal or a number that you will see at which point you decide the federal government needs to stimulate the economy or needs to pull the levers that are at your disposal? What's the trigger?
First of all, it's not exactly just based on direct coronavirus. It's going to be impacted. Our views are going to be impacted on what actually happens to the economy, which can be because of coronavirus. It could be because of travel or impacts in the oil and gas sector. It could also be based on confidence that comes from people's expectations for challenges in supply chains and knock-on impacts that we have in the economy. So there will be multiple things that we will be looking at. It won't be any one particular measure. But overall, what are we trying to protect for? We want to make sure that our ability to be resilient in the face of this challenge is there. Happily, we're starting with a very strong balance sheet. When I talk to G7 finance ministers, it's not lost on them that we have the lowest amount of debt as a function of our economy. That means we have a better capacity to invest if we do face a challenge than any of those other 6 nations sitting around the table. So that's a positive starting point, but it doesn't in any way relieve us from doing the hard work right now to think about what we might do in the case of further escalations of this challenge.
Do you have all that fiscal room to invest? The projected deficit was $19.8 billion, revised to hit $26.6 billion. That doesn't include the spending promises that you made in the campaign, which amount to $9.3 billion in 2021, increasing to nearly $17 billion by the 4th year of that mandate, if that's how long the mandate lasts. Do you actually have the fiscal room running deficits at the current level that they are?
Well, that's a lot of numbers that you just talked about, Vashi. I think we should go to a simple number, and that's the amount of debt we have as a function of our economy. That is the number that gives us the ability to potentially invest in the case of challenges. What you see as well is if you look at our deficit as a function of our economy and you compare it to other countries, we're in a very strong position. I mean, the U.S. situation is 5 times as much investment in a deficit than we have. UK and France are also significantly more. So yes, we have a good starting point, but we do need to consider how we can best actually make an impact.
There are risks, though, Minister, right now to even the numbers. There are a lot of numbers, but there are risks to those numbers as well. I'm thinking, for example, of revenue. If growth has slowed to the degree it has, business investment is down as well. Corporate revenues could be impacted. The revenue that your government takes in could be impacted. Will that influence the spending decisions you make, for example?
We need to take a look at all of those issues, Vashi. It's correct what you're saying. I mean, if we do find that there's an impact on the economy, it can impact our overall level of GDP. It can impact government revenues. But I will say that we are in a strong position to actually take measures should measures be needed. And it's important for us to be thinking about coordination across the country so that we can actually have a way to deliver for people in all different parts of the country, and also getting experience from other countries that are more likely to have already taken decisions because they are at a more they're more acutely impacted by this issue at this stage. So that's what we've been taking. We've been actively engaged in this really from day one, and I will be staying actively speaking with my colleagues and with business leaders in Canada to keep on top of this challenge.
I take your point on the level of engagement. I guess I wonder if I'm a Canadian and I'm listening, I'm a bit worried about, I know I'm not panicking, but I'm a bit worried about the hit that our economy could take. What do I glean from what you're saying about when the government is prepared to act and how they will act? I don't really know at this point.
I think what you should glean is that first and foremost, we have a good starting point. Second, the impacts on our economy are potentially there, but they have not yet fully come to fruition because we are not impacted as much as other countries. We're going to be prepared. We're going to be prepared to deal with this in a way that can support people if they find themselves in a vulnerable situation, and can support businesses if they find themselves in a situation where they can't keep their business going because of changes either in their supply opportunities or potentially in their demand.
What does that mean tangibly, though? Like money for businesses or money towards individuals, extended EI benefits?
We are looking at the various things that we could do, and basically all of those things are potential. What we talked about in our G7 call this morning was, for example, specific supports that Italy is giving to businesses with credit support. What other countries are thinking about includes unemployment insurance type support. So there are specific things that we are contemplating, of course, and making sure that we're prepared should we find ourselves in a situation where those are the right things to do, given the facts on the ground.
Okay, Minister, I'll leave it there. I really appreciate your time. Thank you so much.
Thanks very much.
The number of coronavirus cases in Canada grew today by 3 to a total of 30. Most are in Ontario and BC. There's one case in Quebec. Alberta has no confirmed cases yet, but it's still very much affected by this outbreak. The spread of the coronavirus has disrupted trade and travel worldwide. That means less demand for oil, which means the price of oil is once again sliding. Jason Kenney is the Premier of Alberta. He joins us now from Edmonton. Hi, Premier. Thanks for making time for us.
Good to be here.
Premier Kenney, yesterday you said that, quote, we're doing everything that we reasonably can to get this economy moving again, and yet we're being sideswiped by global events that are beyond our control. Is that just political cover for the fact your decisions haven't done for the economy in Alberta what you said they would?
No, in fact, the Conference Board of Canada just last Thursday projected that Alberta will have the second fastest growing economy in the country this year at 2.2% growth and 2.3% in 2021. We've seen some significant new investments, over $2 billion in new power production, $16 billion in capital investments announced by TELUS. I could go on. The point is there are a lot of elements of good news here, but there's no doubt that the global economy is being affected by the coronavirus. That's the question to which I was responding in that answer. And that does, as you pointed out, Vasi, affect energy prices that are down sharply. They seem to be recovering somewhat. Here's the good news. In the last 5 years, Canada's energy producers have become a lot more efficient out of necessity, and they've reduced their operating costs for exploration and production by about 30%. And most of our major producers can make at least a small profit at roughly $45 West Texas Intermediate priced oil, and we're above that today. So, it's challenging news for us, but I think we'll get through it.
With respect, the point you make about growth is true, but you also did promise the creation over time of 50,000 jobs due to your corporate tax cuts. Since last June, 50,000 full-time jobs have been lost in your province. Again, is this really going to be about oil prices, or are the decisions that you have made not working out exactly the way you promised?
Well, you're conflating a number of issues there, Vasi. First of all, it's now clear, based on the same Conference Board study and some other reports, that Alberta apparently was in recession last year. We inherited an economy in negative growth in the summer of last year, and we're doing everything we can to turn that around. The 55,000 projected full-time new jobs to be created by our 1/3 reduction in the business tax rate has been validated by several of Canada's leading economists like Professor Mintz, Professor Dalby, and a number of think tanks. But that's over 4 years, and we're only halfway through the 4-point reduction in the business tax rate. We're also just really getting the ball rolling on our red tape reduction initiative. All signs have been that 2020 would be a turnaround year for Alberta. The Canadian Association of Petroleum Producers projecting for the first time additional capital investment in the energy sector. As one example, CNRL announcing $250 million of new investment in exploration, and a lot of interesting, good stuff happening in other sectors. But obviously, that's going to be dampened by, if there is a global recession, that I think will unfortunately probably impact all parts of Canada.
Are the estimates that you made in the budget overly optimistic where the price of oil is concerned? Your budget forecasts about $58 a barrel. It's hovering around the $48 to $50 mark right now. Various economists have projected there's going to be about a 20% drop in demand just from China. Were you overly optimistic? Are your revenue assumptions optimistic?
Well, we did lock in our budget projections before the coronavirus really started rolling and its economic impact was felt. So clearly things will be down at least somewhat. Let me say, though, that in January, the West Texas WTI oil price was, I think, about $65 on average. And just to put this in perspective, we chose what the Department of Finance officials gave us as prudent projections based on private sector forecasts for commodity prices, economic growth, and we've built in a contingency amount in our budget as well. So look, if we actually do end up in a significant prolonged global downturn, obviously that will affect our finances. We hope that won't be the case. We think we have some room to maneuver, but it underscores the need for continued fiscal discipline on the part of our government, which is why we're reducing spending overall by 2.8% over 4 years. If,
in fact, though, the budgetary situation, your fiscal situation does change, is your government considering the possibility of further spending cuts?
That may be necessary, and I've always said that if there is a significant global recession, or if we don't get a major pipeline built to increase market access for our energy exports, that we'll have to look at a plan B. Our hope is that does not happen, but here's the truth, Vashti, on Alberta's fiscal policy, we spend by far more than any provincial government in Canada on a per person basis. We spend about 20% more per capita than BC, Ontario, and Quebec. If we were simply spending if we had the same level of efficiency as those governments, we would be spending $10 billion less than we are. We'd have a $3 billion surplus instead of a $7 billion deficit. So I do believe that means there is room for greater efficiencies in the public sector here in Alberta, but we're trying to take this in a very moderate, trying to take this in a very measured way because of the fragility in our economy.
I get that. I guess I wonder, and I'm sure you've heard as much as I have over the past few days since the budget was introduced from the opposition, from various stakeholders who are concerned about the cuts that have already taken place. And they're worried, I'm sure, that if your government is open to further spending cuts because of a global recession, that it'll happen on their backs, that you'll make the adjustments that you have to on the backs of parents and school kids and things like that. Your response to those concerns?
Well, Vashti, the parents and families have experienced in this province, their after-tax income is down about 8% from where it was in 2015, whereas the public sector has been growing significantly. My predecessor added 15,000 people to what was already the best compensated and largest per capita public sector in the country with the most expensive public services. Here's the odd thing. According to Dr. Janice McKinnon, former NDP finance minister, who did a fiscal review for us, we get less bang for the buck than comparable provinces in many areas like university enrollment, high school completion, life expectancy, infant mortality, many surgical wait times. So we're getting less bang, but for more buck. That doesn't make sense. So we're challenging the great people in our public sector to help us deliver services at least as efficiently as they do under the NDP in British Columbia and under the governments in Ontario and Quebec. I don't think that's unreasonable to ask. The only alternative is we just blow out the debt and end up spending more in interest payments that crowds out future spending for public services, or we raise taxes significantly in the middle of a fragile economy, that would kill more jobs. So I think we're taking the right measured approach.
I would only quickly point out that the study that you referred to by Ms. McKinnon didn't even look at the sort of revenue side of things. It focused solely on the spending side of things. But before I let you go, I spoke to Minister Morneau a bit earlier, and he talking about the upcoming budget. I remember the last time we spoke, you had a very specific ask into the federal government where fiscal stabilization is concerned. A big number, I think it was about $2.4 billion. Correct me if I'm wrong. Have you had any response? Where do those conversations stand?
No, we haven't. I just want to remind your viewers that we had a unanimous support for that request from all 13 premiers of the provinces and territories through the Council of the Federation. And it's not only Alberta that would receive some benefit there. We have not heard a response, so we are hopeful about the upcoming federal budget. We've also made a request to help get a lot of the, especially younger blue-collar folks here who have been so massively affected, back to work. But the $2.4 billion in a retroactive payment on the fiscal stabilization program, we see as a kind of mini rebate on our massive contributions to the rest of the Federation, $20 billion net to the rest of Canada, and a lot of that goes out through equalization. So we hope to see that as a small sign of fairness in the Federation.
Okay, I'll leave it there. Thank you so much for your time this evening, Premier Kenney. Appreciate it. Alberta Premier Jason Kenney.
Thank you for your questions, Vashi.
Hi, I'm Vashi Kapellos, host of Power in Politics. See more of our show by subscribing to the CBC News channel or click the link for another video.